everybody to be able to automate all of that, opposed to hiring somebody else.
Yeah, okay.
It can do that all in-house, which, you know, there's definitely merit to that.
I'm like, Sean,
I think putting it all out for free ain't better than even just trying to sell that kind of stuff.
okay.
Maybe we just go live, you know, once a week and put out a piece of educational content that has implementation,
Right.
you know, built in.
Right, better. So, yeah.
And that could be like a separate segment on
Right.
Mailbox money.
Randy, you want to do what, 10 minutes?
Yeah, I'll do that.
All right.
Cheers.
Cheers, bro. Good seeing you back. Can't wait to hear about it. We're about to get some gems. Got some good questions, hopefully, to ask. Got some good questions to ask you, and yeah.
All right, so we're here today at Fox Cigar Lounge here in Old Town Scottsdale, back from a couple events, a lot of things going on, but this is Mobile Mailbox Money, where we teach capital investors how to start performing with double-digit bearing contracts collateralized by physical property out around the nation and here in the Arizona market. I'm Alberto Hardo, President of Silvercrest Opportunity Fund, Vice President of Win Mobile Homes and Mobile Mailbox Money. I'm here today with my sidekick here, partner in business, Sean Gibson.
How you doing, everyone?
Appreciate having you on the channel today. You know, a lot of deals going on, a lot of capital.
Absolutely.
And a lot of new relationships.
Yep.
So just wanted to sit down today here at Fox Cigar Lounge, sitting here smoking a Padron 1964. I think this is the presidential.
Okay.
Longer than the Toro. But Sean, what do you smoke?
I've got the Fuente Grand Reserve. So nice little smooth smoke. So yeah, I'm enjoying it. So this is where I flip the script. I'm going to be asking the questions all of them, because if anybody's watched the show, our little show here, he does so much in a week that most investors have no idea. I mean, if you're getting started in the business, you have no idea what's going on. So this is kind of a recap of these last 2 weeks since I've seen you guys. So the first question is, you've been to 2 events, raised capital, sold notes, bought homes, sold homes. Let's talk about the last 2 weeks as far as your events go. Just give me some information about your events.
Yeah, so we just got back from the Dealmaker DFW. Shout out to Jim Ingersoll. Great event, as it's more of an education towards private lending and, you know, proper due diligence, proper way to vet a deal, you know, deed and trust, or, you know, a note or deed and trust, or a mortgage. State, you know, all of those are items to evaluate when entering into a private lending component, and them there being seasoned professionals out in the industry, almost had like a workbook style environment that provided documents and things of that nature for individuals that may feel new to private lending. So it was a great place for us to go meet new private lenders and individuals wanting a collateralized lending opportunity at a high yield on the interest bearing on the contract. So met multiple individuals, you know, met Bobby Vieira out of Pennsylvania, who started a wholesale business, and he's scaling into, you know, other commercial property. Who else did I meet? I met Tom Olson, who's a hedge fund manager in the, you know, kind of the Midwest area. I met Mary Hart and Wendy Sweet, you know, both other operators here in the nation, you know, really touching a lot of the influential individuals across the nation, throwing ideas out, you know, seeing how we can potentially do some additional business and all the above, you know, from Eddie Speed and Jeff Lawson, big names, you know, magnates of seller finance, creative finance, and private lending, seller finance notes, real estate notes. You know, so unfiltered value provided at the event. It wasn't cheap. You got to pay to be in the room. I'm assuming it did some content over there, you know, regarding private lending and the opportunities that we have. Got the logo for Dealmaker from Jim Ingersoll.
Awesome.
So he gave us our blessing to additionally market their program. So, you know, that was just a couple people that we met, some gems that we picked up from the meeting. We'll be following up with a couple individuals.
Absolutely.
Man, I think I handed my business card out to like 30 people.
Relationships.
You know, some of our other operators just to bring on the podcast and bring value to the viewers, and others, you know, probably a good batch of 10 were newer private lenders and seasoned private lenders wanting return out in the market, and they loved the products that we provided. So that was Dealmaker.
Right.
Now we're back here in Old Town Scottsdale.
So that's my next question. Obviously, prior to the audience, a lot of people don't have as much expertise in as notes as you. They're starting. You went to a couple different conferences. What were the big boys or women picture of the market right now? Since, you know, we're in October, almost the end of the year, but what was the overall feeling of the market and private lending and notes and real estate?
So I think people are starting to wake up to properties not always appreciating. You know, at the end of the day, there's a lot of people waiting on Jerome Powell to reduce rates and things of that nature, where in the room, we understand the availability to get a position at low loan to value to hedge our bet, you know, ultimately. And that was discussed a couple different ways at the end of the day. It's important to know how to make money in up and down markets.
Right.
And that ultimately creates a bulletproof investment portfolio at the end of the day. So a lot of owner operators of large rental portfolios were looking to exit their portfolios and come into more of a private lending component because they understand the risks associated with owning real estate.
Yeah.
Whereas when you become a private lender, you know, those risks, it's all the benefits of earning in real estate without owning any real estate at the end of the day. So, you know, that was a big trend, understanding the plateau of appreciation and, you know, dialing down due diligence check boxes in order to feel confident to operate at times of uncertainty. Why? Because there's real deals to be had in times of uncertainty. If you're a buyer or a lender, you know, in an environment where individuals are kind of on their heels a little bit, you know, that's where the rubber meets the road, and when our real opportunities start to come to the table.
No, yeah, that's fantastic. So obviously, last week's a probably been action packed, and again, I would stress this: you always see the highs, you see the big checks and the cars and the watches. But tell us about some of the things, one situation this week or last week that you kind of overcame as a real estate investor. I'm sure you've got about 30 of them, but yeah.
Yeah, you know, recently we do a lot of seller finance transactions, fully compliant. They're double underwritten in manufactured housing. We're doing some more private home equity lines of credit on single family properties at 65% loan to value or less with the due debt. So as we do a diversified amount of transactions, some are bound to go wrong.
Yeah,
behind.
absolutely. Yeah, absolutely. Right.
You know, and that happens. So, you know, it's important to know what to do in those environments. But just for instance, like I mentioned on our mastermind 2 days ago, on Thursday at 12 o'clock every Thursday Pacific time, I mentioned that we had a home from an investor that bought a note from us on a manufactured home here in the Arizona market, Ellsworth and Broadway and Mesa. That property went behind. They end up losing the property, and now it's back for sale. Well, what's interesting, which that is the risk within the investment strategy. People don't understand that, you know, there's built-in bells and whistles to mitigate loss or maybe even make additional profit if a property goes non-performing. So we had property in Mesa that's now non-performing. We've now repossessed the unit within 40 days of non-payments.
That's okay.
So at that point, that investor who bought the entire note within their portfolio owns that position. They now own the house because they repossessed and used their interest in the property to take over the unit because of the default. Within 40 days, we've now repossessed the unit, retitled the property, and now have it back for sale for more than what it originally sold at, because it is seasoned right now. For this happens to be in a 55 and older community. I think the individual paid $65,000. They put $10K down, so they lost their down payment, unfortunately. But the UPB unpaid balance was $55,000, and we have it for sale at $75,000. I think there was like $5,000 that we had to come in and do some title work and you know, landlord move in and out special of getting the property back repainted. They nicked up the walls and stuff like this. But it's not completely destroyed by any means. We actually rehabbed the property prior to it selling, which is the majority of the homes that we come into contact.
Right, absolutely.
So it's back for sale right now at $75,000. The investor will have a $4,000 commission, about $1,000 in closing fees. So that's like $11,000 that he'll come out of pocket to establish the property. We could have sold it as is.
Right, of course, right, right.
Probably for what the unpaid balance is.
Right.
But there's an additional profit potentially to be made with our niche market expertise in the area. So we'll see how that plays out. At the end of the day, that's just, one of the risks within doing investments. We've done 350 transactions, and with a 2% default rate and niche market expertise in manufactured housing really helps mitigate or make additional return on investment. So that's just one out of, a bunch of deals that are going on right now. The previous time that we were here, we had just got off the interview. It talked to a community on Maryvale called the Longhaven Estates.
Yes.
So it's a community owner who bought 20 manufactured homes brand new about 2 years ago, sat on them for a year or more, sold 2 or 3 within that time frame, but the portfolio came to us for a potential acquisition. They had a wall for sale at like $49,999.
Yep, that's right.
As 2-bed, 1-bath year 2023 in a 55 and older community. Lot rent's like $950.
Yep.
Average rent in the area is like $1,500 to $1,750 for similar square footage and unit and beds and baths.
Yep.
So, creates a potential acquisition. We got them under contract. They wanted $30,000. We offered $20,000. They came back at $25,000. We came out the door at $23,500
Right.
for 11 units.
11 units was right. Yep.
So it's like a $250,000 acquisition of 11 doors that potentially have a monthly margin of $500 a month, whether seller finance, rental, or lease option to purchase within that transaction. That's $500,000 right there at the end of the day. If you're making $20,000 a door, and 11 properties at, that's $250,000 plus the monthly cash flow at $500 a month. You're making $5,000 a month, in 10 doors diversified. Is that right? 11, 5. Yeah. So
Yeah.
that's $50,000 a year, in monthly cash flow. If I'm doing that math.
I think so. Brother Matt, right. Exactly. No.
Truly, a great hedge, a great deal. Came to us because we get the best deals in the.
Absolutely.
Just kind of a couple of deals that we had flowing back and forth.
So people that are new are like, if I heard this, they're like, okay, this guy went to 2 conferences. He comes back. He buys 11 units. He's selling nodes. You're raising capital. Like, how does somebody even get started? Like, because they can't be you. They don't have the expertise or knowledge. But how could someone start with those steps? That's the only people who don't have the expertise, but they want to get the notes. How will they do that if they're not already are?
Working relationships is about most important. Working your already established contact sphere, and figuring out what people want, what people need. Some people need to put money to work.
Yeah.
Because there's challenge for them. Some people need to buy a deal, which we like to buy deals.
Right,
Sean brought the deal to us because we're a buyer at the end of the day. But the individual's working like a 9-to-5, really wanting to jump into possibly a side hustle or something like that. What I would do is I would go and either look at residential properties or properties that the listings have expired and possibly call them and try to wholesale that property, get it wrapped up because we may buy it at a deep discount.
Right.
Figuring out what people's buy boxes are so you can actually bring them a deal flow of potentials that they may close.
Yes.
In manufactured housing here in Arizona, you could go drive parks on your off time and bring us for sale by owners that either want to list with us or want a cash offer or just having challenge out in the market. Sourcing deals, if you find the right deal, the money will come at the end of the day.
Absolutely.
I learned that really from just being around Azria and, anyway, that's kind of like a wholesale environment. They can also help list our properties for sale as a marketing strategy.
Yep.
To earn, $500 to $4,000 for either an acquisition. We benchmark those at like $1,000 a door for an acquisition. But on sales, someone could become a sales agent in manufactured housing and make a $4,000 commission per sale as a licensed agent, which is really just a background check in our training under our rope.
Right.
Kind of really nimble, opposed to the comparison of a residential real estate license where it's extensive education and then you throw the book away.
Right. Yeah. Yeah. Exactly. Right.
Your license, kind of unique within that environment because, it is personal property manufactured housing. But those are just a couple case specific, items that people can go and actually physically do. We sell a lot of notes. So I talk to a lot of other investors that may only have $30,000 to $250,000. They end up running out of money. They want to buy more deals. So they start raising capital on the side, working their relationships because they know we have deal flow of qualified cash flowing and compliant real estate notes out in the market. So, you could start learning the hypothecate notes, which means to pledge an asset in order to garnish capital investment, start raising private capital.
So they can get in the game like that, right?
That was like 10 different things. What he could do, whether you're wanting to do something remote or you're wanting to physically, build up your brand and business out in the market as doing deals, all of those are areas of opportunity.
Excellent. Well, we won't keep all of them too long. The reason why I like doing this because to peel back the onion of real estate investing. Also, whenever we have this conversation offline, I always find a new gem or new nugget. But I'm gonna keep it short. We're gonna smoke a cigar. These guys been on planes, airports, rental cars. So, any last words, sir?
Planes, trains, and
Automobiles, hotel rooms, eating crappy food in the airlines.
all in the want for financial freedom and return on investment. What do we call that? That's what we call mobile
Mailbox money. That's right.
Appreciate you guys viewing today. Go back and view the previous blogs, the podcasts, the educational content, the industry experts and magnates out on the channel like Mark Monroe, Any Speed, Patrick Franz, Desi Arnaz. The list goes on of industry gems and education. Start taking one step closer to your wants and dreams of financial freedom. Bam, 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 bam.
Just buy a note. Mailboxmoney.com.